Traders, have you ever wondered how banks trade in the forex market? So, by now you should know that we have a volume of $7.6 trillion that is being traded every single day in the forex market. Yes, and most of the times, banks look for what we call liquidity. Banks want to trade in the forex market, they look out for liquidity. And today's video, I'm going to be showing you how you can find liquidity and be able to take trades from the forex market. So guys, if you're new around here, guys, make sure to watch this video from the start to end, because today I'll teach you how you can trade like the banks. And also, I'm using Fxview as my broker, and Fxview is the platinum sponsor of the IFX Expo that is going to happen from the 16th to the 18th of Jan this month in Dubai, guys, and I'm going to be there. Let's jump into the video. Now traders, I know I don't trade ICT, but sometimes there are some concepts that I trade from ICT. You know, that doesn't mean I use the ICT strategy, but this is just understanding how banks trade. Let me illustrate for you something small here. When you talk about liquidity is something that banks always look out for when they're trading in the forex market. They don't just trade anyhow. I'll give an example. Let's say we have price pushing up in an uptrend like this, as you can see. Now, when price pushes up just like this, it has left liquidity somewhere, and this is liquidity right here. Meaning price has to take out this liquidity. Let me do an illustration until then I'll tell you all the parts where we find liquidity. So if price goes up like this, it has to take out this liquidity just like this. Now when price comes back again down like this, there's liquidity right there. It has to go up and take out that liquidity, as you can see, guys. The process can happen for quite some time until we finally get a reversal. Now if all this liquidity has been taken out, then there is liquidity untouched, which is this one right here. You can see there's this liquidity untouched right here. Meaning most of the time you see price come back down and take out all this liquidity in one go, just like that. This is just an example of what liquidity looks like. This is what we have, as you can see, guys. This was all liquidity untouched, as you can see. And then this is liquidity that was taken out when price was going in an uptrend. So this was taken out. Same to this was taken out, and same to this was taken out. Most of the time when banks are taking out liquidity, they tend to take it out, all of it. This is just like a small illustration. So let's jump onto our chart. Now this is the chart that we have, and I was able to take a trade off this BTC USD trade. What did we have, guys? We had a price push up in an uptrend. Obviously you can see price push up in an uptrend. This is an uptrend market. Remember, BTC right now is in an uptrend. Price was pushing up in an uptrend. As you can see, we had this impulsive move to the upper side, then we had the retracement, then again we had another impulsive move to the upper side. You can see, again, first thing first, up here, this is buy side liquidity up here, meaning price has to take out this liquidity up here. Now other than that, we had also fair value gap in here, and then we had also this liquidity right here that price had to take out, and also this is also liquidity. For my case, I just came marking out all the liquidity points that I had in the forex market, all the points just like that. And then also I plotted this fair value gap just for the sake of price filling it up. This was my fair value gap right there, that one right there, just for the sake of price filling up that fair value gap. That's why you see we had price push back down, as you can see, much momentum. As I mentioned, price drops like with one go, so you can see how price pushed down like 1 2 3 4 5 candles up to down, and then took out this liquidity, as you can see, guys. Now other than that, we had also order blocks. So this is another block right here, and most of the times this is where liquidity is taken out from. So you can see if I draw, this is nice. You see how when price bounced off of our order block, even we had another order block down right here, which is this one right here, down right here. Now this was not my main point of liquidity. Now this can sometimes confuse traders. Now the liquidity that I'm talking about is trendline liquidity. And how do you see trendline liquidity, guys? The trendline liquidity is just an example of what I gave you right here. See this? This is trendline liquidity right here. See this right here? This is trendline liquidity right here. See, price comes, takes it out. So it's the same thing we had even here. Now this is our point of interest. This is our main point of interest right here. So this was our main point of interest, just here. You can see, guys, this was our main point of interest. as you can see. It was more of a pattern. Some can say like that, but if you want, you can even just draw out. I drew something like this, as you can see, guys. I drew something like this, as you can see, just to have this trend line. For those that don't know, trend lines are also liquidity. 5-hour gap is also liquidity, and that is always things that banks look out for when they're trading in the forex market. Let me remove this and then just explain it with just this bear trend line. As you can see, guys, this bear trend line right here, as you can see. Traders, I think we can even add this just to give it a pattern. Not really of a pattern, but yeah, since we can draw it out, let's draw it out just like that, then reset our page right like this. Now guys, I want you to notice one thing. Anytime when you see such a structure in the forex market, I repeat, anytime when you see such a structure in the forex market, when you have lower liquidity like this, that price has to take out. But in this case, we have more of aggressive buying. So you can see from here we have aggressive buying. Same thing, we have aggressive buying right here. But also, price leaves this upper side liquidity, this one right here, that it has to take out. Most of the times, traders are going to be caught up trying to buy. In actual sense, price is going to drop. That's why when you see price here dropped, take out people's stop losses up to down here. But as price is doing that, it's leaving out this liquidity right here. That's why I told you sometime, even though you're not considering liquidity, you can consider taking trend line trades. This would be like a trend line break. You see this? This would be like a trend line break and then a retest, you can see, guys, and then you take your nice trade. But again, if you add the concept of liquidity, you should know that when you see such a structure and price drops like this after the trend line, it's going to push up with much momentum to take out liquidity here, and liquidity here. Let's mark out the liquidity that was taken out. Most of you guys will be confused. Where's the liquidity? We have liquidity right here. We have liquidity right here. We have liquidity right up here. See, all that liquidity was taken out. You see, traders, all this liquidity was taken out. You see, so all you do is just mark out your liquidity and then look out for something to tell that price is going to reverse and probably take out your liquidity. Now for my case is price tapped into my two order blocks. The order block I had first is this one right here. Price tapped in and then also took out this liquidity right here with this weak liquidity. This is a weak, not weak as being weak, but this is a weak, W-I-C-K, weak liquidity. And then after tapping into this order block right here, you see price tapped in and then gave us these all more of a reversal sign that price is going to reverse and go back to the upper side. You can see. Now the other thing we had is price broke this trend line and retested it, as you can see, and then after pumped up to the upper side, taking out liquidity here, liquidity there, liquidity there. And I've seen this structure multiple times, guys. I've seen this structure for the longest in the forex market. Now let me show you the trade now that I took. This one I was just showing you a sample, but I took the trade from here. Let's jump onto our chart right here. Now this is how it looks like, traders. You can see this is how it looked like. This was my beautiful chart. We had price, give me this. I was basing mostly off this trend line, or this double trend line that I had drawn, the double channel that I had drawn. This is our double channel. You can see, guys, we had price range in between, but as it was doing that, it was leaving liquidity up there, as you can see, guys. But you can see even from where price reversed to start going back up, I had drawn all those zones right there. I was waiting for price to reverse and go back to the upper side because I wanted to take a massive trade, and I had to wait for quite a long period of time, guys. This took me a long period of time, but after price broke out, so it went straight to profits, as you can see, guys. I put my take profit up here. Reason why I want to take out a recent zone as my take profit, and then I put my stop loss just below there. You can see, guys. And also the reason why I was taking my trade here is because this is a recent. If we are to say these are lower highs, this lower high was taken out, as you can see, guys. This is why I consider this as my entry point, and then putting my stop loss right there, guys. You can see. Reason why the liquidity is good is anytime when price is taking out liquidity, it's just going with one candle up. It's going with much momentum to take out liquidity. After banks driving markets wherever they want and grabbing more money, they'll go and then do this. That is one example. This is another example of liquidity. These are off all trades that I took, guys. Now currently what we had there is we had price come up again, ranging in between, as you can see. Now with this chart right here, you can see guys, price was just ranging in between here. Here we have fair value gap, you can see. Fair value gap here. Price drops to the downside right here. As you can see, give us this nice trend line. You can see. As I mentioned, trend line is also liquidity. Price goes up to take out this liquidity here, and also liquidity up here, which is fair value gap. As I mentioned, fair value gap is also liquidity. Then after that, price starts ranging back to the downside. But again, as it's coming to the downside, there's liquidity here. Also, there's this downside liquidity. Price comes down, takes it out, as you can see, guys. But after that, we also had this black line here. Again, as I mentioned, trend line is also liquidity. Price comes up and takes out liquidity up to up here. As I mentioned, again, when price is taking out liquidity, it will come with really much momentum. Example is this and this, as you can see, guys. Traders, liquidity is one of the easiest ways you can trade in the forex market. You should check it out on 1 hour candles for entries and all those. The concept that I was teaching, I was not teaching on how you can enter, but I was just telling you how you can find liquidity. In the next videos that I'm going to be posting, I'm going to be showing you a full video on how you can take your entries and be able to maximize off liquidity. But liquidity, this is one of the best ways you can make money from the forex market, guys. And remember, Fxview is the broker that I'm using, and they're the platinum sponsor of the IFX Expo that is happening in Dubai on the 16th and then 18th of this month, guys. Make sure to be there, and I'm going to be there. Traders, liquidity is one of the ways to go. Reason why banks look for liquidity, they don't just trade anyhow. Guys, if this video has been helpful to you, make sure to subscribe, and I'll see you in my next.